My happy, my sad, my fearful, my greedy apes, welcome back to the channel. Hopefully you guys are happy and excited. We are seeing some incredible price action today. Even though AMC is pretty much flat on the day, we got a glimpse into the trading algorithms and what is likely to happen. If you guys want the full thesis, check out the first video that I posted today for that. But we're going to go over what happened today, why this is so significant comparing to January as well as June. There is also some things coming up later into the month that we must talk about, like the Fed meeting and what is going to happen between now and the Fed meeting, because not too much is actually going to happen until then. But we'll get into that, all of the other information that you guys need to know. All I ask you to do is hit the like button for me and consider subscribing to the channel if you guys find value out of this video. So let's jump to it. AMC is pretty much flat, up 0.13%, only up 3 pennies at the time of this recording. Now, why was today significant? Because we did hit that low at $20.80 per share December 14th. We hit the same exact low today at $20.80 as well. And then we did get a pretty substantial move to the upside from there, about a $2 move in total. So that looks really good. Last time that happened, we did rally about $12 to the high. So likely to happen again, we do see a rally. But take this back to January and June, you were seeing all kinds of price action like this. You were seeing the double bottom patterns like back to back, right? So we've seen that in January, double bottoms in here, and then we did proceed to rally 10x, and then back here in June as well, which is very easy to see, right? You see the double bottoms in here, pull this out, see the double bottoms in here, bottom, 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 and we started to rally. So it's pretty clear what is coming. Ultimately, I do think a rally is coming. A 10x rally, I don't know. That would put us at about $200 per share. I think it's possible. Is it likely? Probably not until some of the fear is gone in the marketplace, or if we see what we've seen last January where the markets sold off but money piled into AMC and GameStop. I'm not going to sit here and feed you guys some bullshit. I don't know exactly what's going to happen, right? So that would be deceiving you to tell you that I knew what was going to happen. I knew we were going to 10x like the last times we seen that happen before the January and June run-ups. I just simply don't know, and I'm not going to lead you guys on like that. But as far as what we are looking at currently, we are still in this inverted head and shoulders formation. That, in my opinion, has not gone away. You might hear different takes on this throughout the day today, but I still think it's intact. As far as the double bottom is concerned, that is a sign of a bearish, trend that is ending and forming a bullish reversal. As you guys can see right here, it says the double bottom breakout is a bullish reversal trading pattern that emerges at the end of a bearish trend. The reversal is composed of 2 consecutive bottoms with approximately the same equal lows. You may also enjoy reading the symmetrical triangle trading strategy. Highly recommend you guys check that out as well if you guys do not know what that is. But long story short, a double bottom usually leads to a rally unless we go up a little bit and then head back down under $20.80 per share. That would be the way to ultimately not see this bullish reversal. And I think that's very unlikely to happen since you did just see such a volatile move from the bottom today, like you also did see December 14th. As far as the day, we're seeing 45 million shares that have traded hands, almost 46 million. So it's still a relatively low volume day, just like we have been seeing. So once we do see that bullish volume head into the stock, expect to see the stock go up, right? Makes a lot of sense. The level to be watching for is that 20-day simple moving average in between the Bollinger Bands. And keep in mind, they are getting quite compressed. So we are heading for a bigger move. That's what the Bollinger Bands suggest. The thinner they are, the less volatility you are seeing, the greater chance of seeing higher volatility into the future. The wider the bands are, like I said, the more volatility that you are seeing. The 20-day simple moving average is between these 2 green bands, and that's at about where is that at precisely? $26.91 per share. So keep that in mind. That is a very important level. As far as the MACD, we did actually just go bearish, which is Surprising we were actually bullish for this long. This was a very rare divergence of the MACD being bullish as the price of the stock was actually going down. Now, we could see a big bounce tomorrow. Why I am actually going to say this is because you are seeing 98,000 puts that are out of the money and only 98,000, almost 99,000 calls that are out of the money and 2,400 calls that are in the money, and you are seeing about 25,000 puts that are in the money. So if the stock makes a move to the upside, you're going to see a lot of calls start to run into the money, and on the same day to expiration, you have to see instant hedging, as well as on the put side. Once the price of the stock goes up, the puts run from into the money, out of the money. So you also see buying power from that front as well. And if you actually do take a look at the option chain, because it matters how close the calls are to actually going into the money. Seeing 2,500 for open interest at the $23 strike, $24 strike, you're looking at 4,000, $25 strike, you're looking at 8,300, 7,000, 9,600, 8,300, and almost 12,000 for open interest. And at the $30 strike, you're looking at 20,000 for open interest. So if we do start this snowball effect and we do see, a move up in the morning or in pre-market, whatever the case is, and you start to see these calls run into the money, you can see a big bounce. At the same time, the puts will run from into the money, out of the money. And at that $23 strike, you actually have about 36,000 puts that are in the money right now at the $23 strike. So if we break out above 23, you're going to see a ton of de-hedging on both sides. And then 11,400 for open interest, 8,800, 3,200, 6,000, and 4,000 for open interest on that put side. So definitely can see some big moves. If I were to just estimate here, $25 to see $25, $26 tomorrow would definitely not surprise me, and that would make sense with the option activity that we are seeing. And if we do go ahead and pull up the max pain, if you are a believer in the max pain, I am a skeptic, slowly starting to turn into a believer of the max pain, but we'll see if that holds true. The max pain for Friday is $26 per share. That would support what? About a $3.20 move to the upside tomorrow from where we're currently at. That is over a 10% move that we could be seeing. So if you're a believer of the max pain, then we're going to see an over 10% move tomorrow. Keep that in mind. As far as the Ortex data, you're looking at 17.36% short interest of free flow, 89.12 million shares that are sold short, share utilization of 76.52%, and the days cover at 2.47, still a ticking time bomb. Not too much else to say. The data has not moved around all too much, and we know the short interest is much higher than what Ortex says that it is. Now, as far as the catalysts that are coming up here into the near-term future, I know there's been a lot of talk about inflation numbers coming out January 12th. We could see 6 days of a sell-off. I actually just made a video on that, so check that out for the full thesis on that. That's not going to happen. These numbers are for December of 2021. It's widely expected in 2022 inflation to be about 2.9% here. Let me find the tab. 2.3%. Excuse me, for 2022. So it's expected to be pretty damn low. And unless this number comes out really, really high, like suggesting another, almost 7% inflation reading, if it comes in even at 6% or 5%, you're not going to see a sell-off. If it comes in at 8%, 9%, sure, yeah, expect a sell-off. But I don't think that is actually going to happen for a lot of reasons we're not going to get into right here and right now. What is ultimately very important is the Fed. That meeting is January 26th through the 27th. Fed Jerome Powell will be speaking the 27th, and they have already laid the groundwork for what they are going to say, and that is that they are going to start selling their assets. $8.8 trillion of assets. What that is going to do once they start to sell those is flood the markets with supply of these treasury bonds, the 10-year treasury bond. And that is going to move up the actual interest rate because interest rates closely follow the 10-year treasury bond. And this has already moved up quite substantially. And market participants are expecting this to go up even more. That's why we went went from 1.17% interest rate, a yield on the 10-year Treasury, now to 1.73%. So if the Fed comes out and says something dramatic we have not priced in yet, expect to see a sell-off. If it comes in line with what we've expected, I would still expect a slight sell-off, but we could actually rebound on that. But that leaves this gap because, after all, it is only January 6th, and we do have the Fed meeting the 26th and the 27th of January later this month. So about 20 days until anything really should pop off, right? Should see big moves the 26th and the 27th. So what's going to happen between now and then is I personally think we are going to see a slight rally, likely up until that week of the Fed meeting, which I believe should be what the 20th will be. The 24th will be Monday of that week. So all of this, you can kind of expect to see a slight rally, if not just see the markets flat. Until we get new developments, not too much is actually going to happen. And I do think AMC has a strong likelihood tomorrow of actually moving up 10% like the Max Payne suggests, or just to move up in general until this Fed meeting, and then we could make a big move around that expiration of the 21st of January. So that is going to conclude this video. Not too much else to say. If you guys want access to all of my trades in real time that we have been destroying, we've been making a ton of money over here. Check that out if you guys do want to. Like the video, consider subscribing to the channel, all of that good stuff. Check out the links for Public, Weeble, and Moomoo in the description of this video as well. Love and appreciate you guys. Thank you for watching. I will see you in the next one.